Hello traders, welcome to Ford Revolutionary Forex Institute. This is Kosnati, the founder and senior trader of Ford Revolutionary Forex Institute. So traders, in this setup, I will give you an update of the Eurocad because you remember that on Monday I shared like the potential trade of the Eurocad. So let's move forward, traders. Before we move any further, let's read the risk disclaimer. Trading foreign exchange and stock markets on margin carries a high level of risk and may not be suitable for all investors. Past performance is not indicative of future results. The high level of leverage can work against you as well as for you. Lastly, any information or advice contained within this platform is shared for educational purpose only and should not be considered as financial or investment advice. So traders, this is the setup that I shared on Monday. So here traders are so on Monday, I indicated that we had this possible wave cycle because you know that's a wave cycle. It must have the motive wave. So for us, we did have like the bearish motive wave. You can see here we have the 5 waves down under the formation of wave one. Now it seems like the market was approaching to complete wave two. So wave two, you know that it's supposed to be completed like in 3 waves. So we must have a wave A, then wave B, and then wave C. So for us, wave A and then wave B were already like completed. So the market was approaching now to complete this wave C, which is orange in color. So for me, under the formation of wave C, because wave C has to be completed in 5 waves. So for me, this was wave one, wave two. So now the market was approaching to complete so the market had already like completed wave one, then wave two, based on my analysis, wave one and wave two under the formation of wave C. So the main reason traders I believe that this wave two was already completed. It's because this area was around 61.8%, and this was the sharp movement. So traders, you know, most of you who have been following most of my content, you know that I do not like the sharp correction. Okay, so but in this case we had like the sharp correction, but even though this was a sharp correction, I still believe that this correction was already like completed because firstly it was exactly at 61.8% of the formation of wave one. Number two, you can see here this red line here. This red line indicates the 200 moving average, and then our 200 moving average acted as the support here. So if the 200 moving average, in most cases, if it acts as a support, therefore we can start to expect the market to move higher. If our moving average acts as a resistance, therefore we can expect the market to move in a bearish direction. So that point that I wanted to execute this trade, even though we had like the sharp correction, it's because this market highly respected the sharp corrections. Because let's focus here, traders. You can see we have this wave one, orange in color, then wave two. So our wave two was actually the sharp correction. Then when you pay more attention closely here, you will see that our wave 4 was actually also the sharp correction. Then let's move to the formation of wave B, because wave B is also a correction of wave A. So you can see that our wave B was also a sharp correction. So for me, I didn't have any problem having a sharp correction here, just because it seemed like this currency pair didn't have any issues with the sharp corrections, because most of the time the markets tend to repeat what it does, tend to repeat the similar pattern. So for me, it was like, okay, this is another sharp correction. Just because this market, just because this currency pair, it seems to respect most of the sharp corrections. So I didn't have any issue executing a trade based on a sharp correction. So let's move forward just to give an update on what happened. So on Tuesday, so on Monday, what happened on Monday? On Monday, we had this donji. So the markets closed with a donji on Monday. So just because I don't like to execute a trade based on a donji alone, I prefer maybe to execute a trade based on a morning star reversal candlestick. If there is a donji, I expect the morning star reversal candlestick pattern, or I might expect the evening star. So in this case, I was expecting for a morning star reversal candlestick pattern. So for me, so I executed a trade on Tuesday, and then traders on Tuesday, I would say my entry level was totally wrong, or was a worst totally entry point that I had on on this currency pair. This is totally a wrong um, entry point or entry level, and then I will show you why I executed this trade, even though I saw that it was the wrong execution. So let's go to 4 hours just to give you the idea what happened on Tuesday. So on Tuesday we had this strong bullish candlestick. So the main reason I executed the trade is because of this strong bullish candlestick. Just because I've been monitoring this, I had been monitoring this currency pair, okay, and then after the markets formed this strong bullish candlestick, so I executed this trade even though I saw that I was so late, and then my entry point was totally worse. I executed this trade just because of fear of missing out. Because I feared of missing out this setup. Okay, that is why I executed the trade. And unfortunately, the markets didn't move in my direction. Instead, it started to move in the opposite direction. Okay, so traders, the main lesson here, traders, we should not ever execute a trade just because you fear of missing out the setup, just because you have, because here the main reason I executed this setup, I didn't follow most of my principles of executing a trade. I just executed this trade just because I feared of missing out, and that was the worst decision that I made in this setup. I shouldn't executed a trade just because I feared of missing out. So what happened instead? The markets, after I executed a trade, just because of fear of missing out, the market started to move in the opposite direction. So here, this is what happened. You can see the whole week the market has been moving in the opposite direction. It never went above, or it never went in my direction ever since I executed trade the whole week. So it showed me that I was wrong. I was totally wrong. Let me show you what I'm expecting right now. So for me, let me show you on the weekly time frame. So on the weekly time frame, we still bullish in terms, because I'm still looking for this final push to the upside, because I think I can gain more than 200 pips in this setup. So I still believe that we still have the opportunity to execute a bullish position here. So let me show you now on the 4 hour time frame, because this setup is much more clear on 4 hour time frame. Just to show you now what I'm expecting. So you can see here, this is no longer our wave 2. Okay, this is no longer our wave 2. Let me show you. So you remember that we have this. So we believe that this is our wave 2. So this is no longer our wave 2. So now this is our wave A, wave B, then we're expecting wave C. So now you can see that's our wave 2. For me, it will be completed between 1.46080 and 1.45910. So so now I'm expecting the market to complete wave C. The main reason I'm saying that I'm expecting the market to complete wave C is because it seems like the market is approaching to complete five waves to the upside after the completion of this wave B. Okay, you can see this was the worst entry point. So for me, it seems like we have wave 1, wave 2, wave 3, wave 4. Now we are approaching wave 5, because you know that's wave A and then wave C in a zigzag pattern, in a single zigzag pattern. They are both supposed to be completed in 5 waves. Okay, so we have like the 5 waves here: 1, 2, 3, 4, 5. Wave A. Then for wave B, we have A, B, C. Then for wave C, we have 1, 2, 3, 4. Now we're approaching wave 5. So for me, I'm just expecting the market to go down and then reach this area between 1.46080 and then 1.45910. So once the market reaches this area, I will start to look for a bullish position, because I still believe that this this head and shoulders bottom is still valid here. So it's still valid. So I'm still expecting for a bullish setup. So the main lesson here, traders, for me and for yourself, is just that never execute a trade just because you fear of missing out. Okay, we have to execute trade just because it followed all of our principles. So for me, this entry level was the worst entry level, and it was totally wrong. Okay, just because I executed the trade just because of this candlestick. Let me show you, just because of this candlestick, and then because I feared of missing out. So I executed this trade just because I feared of missing out. Instead, and then unfortunately, the market never went on my favor. Instead, the market for the whole week, it has been moving against my position. So for me, the main lesson here for myself and for you traders, it's to never execute a trade just because you fear of missing out. So this is very important for trading psychology and for risk management. Okay, so traders, the main lesson for this currency pair is just that never execute a trade just because you fear of missing out. You only have to execute trades just because it followed all of the principles that you have set for yourself. Because for me, if someone just asked me, why did you execute this trade? I would just tell you, to be honest, I would be honest with you. I executed this trade just because I feared of missing out after this bullish candlestick. After this bullish candlestick, I was like, no, 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 no. Let me execute the trade just because of this bullish candlestick. And then this bullish candlestick, first of all, it's firstly this bullish candlestick was total wrong. Number two, this candlestick also increase my risk exposure to the single trade. Okay, so you remember that on Monday I was expecting to risk maybe like 60 to 70 pips, but after executed trade after this candlestick, I was risking about 80 to 90, even to 100 pips in a single trade. It's because the maximum risk in a trade for me, I will never risk more than 100 pips in a single trade. So for me, this 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 setup was starting wrong for me. There were so many incorrect things that I did in this setup. So the main lesson here, traders, is just that never execute a trade just because you fear of missing out. Only execute trade just because just because that particular setup meets all of your just because that setup meets all of the principles that you have set for yourself, or meets all the rules that you have set for yourself. Because for me, in this setup, I executed this setup or this trade just because I feared of missing out, just because of this bullish candlestick pattern. So traders, that is all I have for Eurocad, and thank you for watching. I'll see you next week, where I will give you the updates of the Eurocad, and then I will also share the new setup, because I will try by all means to share at least a single setup per week, a new single setup per week. So traders, thank you for watching. I will see you next week.